Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about EURUSD because at the moment we do have quite interesting price action and structure. Now, starting here from the monthly, what we can see is that we have seen a massive move to the downside in the recent months, creating this impulse correction and impulse pattern to the downside. Now, since it's been quite a few months without a correction, at some point we could expect the market to provide a deeper correction. In general, we should be attracted to the previous level of support, now turn resistance, which in this case would be exactly this wick, which is the previous monthly support, which is now turn resistance. But as a first target zone, the market is supposed to create a retracement to the 0.32 of the Fibonacci taken on the monthly impulse, which in this case would be this level here. So we could expect the market from these levels to go and retrace at least to this 0.32 of the Fibonacci taken on the monthly impulse. Now, if we drop down on the weekly time frame, what do we see? Now, from a weekly perspective, the market has been creating and respecting structure quite precisely. We had here the retest of previous weekly support and resistance. Here again, retest of previous weekly support and resistance. And now, once again, we had the retest of previous weekly support and resistance, creating a textbook downtrend from a weekly perspective, because in a textbook downtrend, you want to see the market printing lower lows and lower highs, and every time going and retesting the previous support turned resistance, which is in fact exactly what the market has been doing here. However, for every single time that the market creates new structure and rejects it, it has to first face the previous low, that in this case, we're going to face around this area, because there is always the possibility for the creation of a double bottom and an inversion, at least of the short-term trend, for that correction that we would like to see from a monthly perspective. So at the moment, we have no confirmations that the market is supposed to create a double bottom here, but there is always the possibility that the market fails to create a lower low and actually prints a double bottom, because new buyers step into the market at the previous low, which could be the case considering how strong this rejection has been. This wick here has been very, very strong, suggesting that there is good probability that here we will find some support when we reach the area. Now, if we drop down on the daily time frame, what we can see. Now, here on the daily, I did speak about EURUSD a couple of days ago after the market created this W formation. I mean, a full breakdown explaining all the reasons for which from here we could expect this rejection to the downside. The market gave us that rejection, completing the W formation as we wanted to see. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. However, at the moment, what we can notice is that the market has been creating this move to the downside and has the possibility of printing an M pattern. Now, in general, after the creation of an M pattern, what you would expect is for the market to create a rejection to the upside to go and complete the pattern at the previous support turned resistance. So here on the daily, since we are in fact creating this M pattern, there is definitely the possibility for a potential rejection higher and completion of this pattern at the neckline. The neckline in this case would be this level here, which is previous support turned resistance. So we have no confirmation that the market will in fact create this move to the downside, but if it will create that move to the downside, there is good probability for a rejection higher and completion of the M pattern at this previous support turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, so the big players in the market, what we can notice is that on the euro, with the last reports, we went from having a negative net positioning of minus 47.6k net positions with 249k shorts compared to only 202k longs, all the way up to now having a positive net positioning of 43.6k net positions with 199k longs compared to only 155k shorts, which is one of the highest levels that we had in quite a few months. So we are seeing institutional buying around this area. We have already seen institutional buying around this area, which increases the probabilities that if the market will actually create this M pattern, we could expect a rejection away from this area. and completion of the daily M pattern. So if the market will actually create this move to the downside, how we could be approaching this potential rejection higher and completion of the M pattern at the neckline. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection higher and for the market to complete this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns of the Telegram signals, the COT data software, which is the one that we use in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, you will see that at the moment I'm running a special promotion in which you have the possibility to join with a discount. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that from here you have the possibility to join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I'll see you in my next video.